Hey everyone, and welcome back to Your Money Your Way. If you're looking to understand the Singapore Real Estate Investment Trust, you've come to the right place. Today, we're diving into 3 top-performing S-REITs that have been making waves. We'll break down their recent performance, look at the broader S-REITs market, and discuss what this all means if you're considering an investment. Let's get into it. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. So, what's the vibe in the S-REITs market right now? Think cautiously optimistic. A big plus is that interest rates seem to be stabilizing, and the Monetary Authority of Singapore has even signaled a slightly more accommodative stance. That's generally good news for REITs, potentially lowering their borrowing costs. However, there's a flip side. Singapore's economic growth forecast for 2025 has been trimmed a bit, and global trade uncertainties are still in the picture. Performance-wise, it's a mixed bag across different property types. Data centers still booming, thanks to AI and digitalization. Industrial and logistics assets are holding up, though there's a bit of softness in logistics rents recently. For retail, prime locations are doing well, but secondary spots are finding it tougher. And the office sector is seeing some recovery, especially for top-quality Grade A spaces. First up in the list, Keppel DC REIT. This is Asia's first pure-play data center REIT, and it's all about powering the digital economy. Think cloud computing, AI, all that data-hungry tech, that's what drives their demand. Financially, they've been strong. Their distribution per unit, or DPU, for 2024 was 9.451 Singapore cents, a modest 0.7% up year-on-year. But things really picked up in the first quarter of 2025, with DPU jumping 14.2% compared to the previous year. Operationally, they're looking solid with high portfolio occupancy around 97.2% and incredibly strong rental reversions. That's the increase in rent when leases are renewed, hitting around 39% in 2024. Their gearing, which is like a measure of debt, is comfortably low, around 30 to 31.5%, giving them room for more growth. The outlook here is positive, really riding that wave of data demand. So, Keppel DC REIT is your go-to for high growth in a hot sector, but it does come with a premium valuation. Next one in our list, CapitaLand Integrated Commercial Trust, or CICT. This is the largest S-REITs on the Singapore Exchange. They have a massive, diversified portfolio, prime shopping malls, Grade A offices, and integrated developments, not just in Singapore but also in Germany and Australia. CICT is all about scale, quality, and stability. Financially, they delivered a DPU of 10.88 cents for 2024, up 1.2% from the year before. It's a picture of steady, reliable income. Operationally, they boast high portfolio occupancy at 96.4% as of March 2025. And they're getting good rental increases in Singapore. In the first quarter of 2025, retail rent reversions were up over 10% and office reversions over 5%. Their gearing is healthy at around 38.7%. A recent piece of news is their strategic sale of the serviced residence component of Capita Spring, which shows active management of their portfolio. The outlook for CICT is resilient, with a focus on high-quality assets. If you're looking for stability from a blue-chip REIT with prime assets and a reasonable valuation, CICT is one to watch. Our third REIT is Mapletree Industrial Trust. MIT offers a really interesting mix, traditional industrial properties in Singapore, plus a growing portfolio of data centers globally, in Singapore, North America, and Japan. This gives investors a blend of stability from the industrial side and growth from the data center boom. For their financial year ending March 2025, DPU was 13.57 cents, a 1% increase year-on-year. Operationally, overall portfolio occupancy was 91.6% as of March 2025, and they achieved strong rental reversions in Singapore of about 8.1% for the full year. Capital management looks prudent with gearing at 40.1% and a healthy interest coverage ratio of 4.3 times. MIT offers an attractive distribution yield, estimated around 7.2%, which is quite appealing for income seekers. The outlook is balanced, offering both income and growth potential. So, how do these three stack up, and is it a good time to invest in S-REITs generally? Quick recap. Keppel DC REIT. High growth, data-driven, but with a premium price tag. CICT. Stability, prime diversified assets, a core holding. Mapletree Industrial Trust. A balance of industrial income and data center growth, with a good yield. Now, for the broader S-REITs market. The positives. Interest rates look like they're stabilizing or even heading down, and valuations for the sector generally seem attractive compared to historical levels. The challenges. That softer economic growth forecast for Singapore could dampen demand, and as we saw, performance varies a lot between different types of properties. So, it's not a simple yes or no to investing right now. A selective approach is key. Focus on REITs with strong fundamentals, good quality assets in resilient sectors, strong management, and healthy finances. Don't forget the risks. Interest rate swings, a deeper economic slowdown, or geopolitical issues can all impact REITs. In a nutshell, the Singapore REIT market in 2025 offers opportunities, but it's a landscape that rewards careful selection. Whether it's the high-tech appeal of Keppel DC REIT, the solid foundation of CICT, or the balanced approach of Mapletree Industrial Trust, each has its own story. As always, this is for informational purposes only. Make sure to do your own thorough due diligence before making any investment decisions. Thanks for watching. If you found this helpful, give us a thumbs up, subscribe for more insights, and hit that notification bell. Let me know in the comments which S-REITs you're watching. See you next time.